All right, folks. Nick here looking at snow. Crazy day in the chat room. The live room where I'm sharing my screen was pretty fun. Wish I can take in more people, but I think at 250-ish plus or minus is a good spot. Email me if you're interested. Okay, so snow, part of the reporting cohort. This is a 30-minute chart on Snowflake, which reported after hours. Today is Wednesday, 3/2, and it doesn't look that bad, right? That's because it says RTH. That's regular trading session. That's how it was after the close. Let me share what happened. Whee! So clearly, whatever they reported is horrific. The stock is down now 23, so that was, what is that, 30%? I'm eyeballing it. That is an insane drop. So they must have said something horrifically wrong. Let's go find out what they said. I literally do not know yet. I love it. I absolutely love it. This is hilarious. Hang in there. Hold on. The headline writers. I swear to God. This is just a comedy. All right, check this out. These are the headlines from Benzinga Pro. All right, let me see here. Plunges 30% as Q4 loss widens. So they nailed it. It was the loss that did it. Really? This startup company, the loss that did it? Okay, let's review the actual results. Snowflake's 43 cents loss per share. That's earnings. First of all, it's a growth company. I wouldn't judge it by the earnings. It did not compare to the estimate of 3-cent gains, right? It missed it by 1,500%. Whoa, 1,500%. And then they say, this is a 168% decrease over losses. No, if you decrease the loss, you get better, right? This is not a decrease of the losses. This is an increase in losses. A bigger minus is not better. A bigger minus is worse. So anyway, so last year, this time, they lost only 16. Now they're losing 43. Guess what? Because they're freaking growing. They doubled the goddamn business. 101% increase in sales. What? Okay, here's the secret why it's falling. It's to acquire somebody. That's probably why they're freaking out over this. This headline here is clueless. And if it is that's a reason to get long the stock on this dip. I am not long. I don't know anybody that's long. I will be trying to get long tomorrow. Let's look at the chart. Sorry if I yelled into the mic. Oh my God, this is hilarious. Okay, so where was it? Where is it? Oh, it's right there. So if you tell me this chart, the stock lost footing, I would tell you, first of all, that test was pretty solid. This was war with Russia, basically. This was the 124 bottom, the market bottom. Both of these were scary market days. And you're telling me that this stock, whatever it is, earnings or not, fell through these. I would tell you the downside scenario could be like 100 or 80, technically. But I would also say strong support right here. That's what I would say. And guess where it's at? Right here. So tomorrow the trade is to catch the falling knife with a tight stop. So how does that work out? I set a bullish trades however I trade. I make it a finite amount of risk because there's also external stuff that's going on. And then I stop out if I'm wrong. How does that happen? I'll share the details with the members, but you stop out however you stop out. I have foolproof methods for this particular scenario. This is like a beautiful drop. The company business is increasingly better, and the stock cannot find footing anywhere. And then the headline says, drops after reporting a widening loss. Really? What the Okay, so let's see. The problem is it's one of those young companies. It doesn't have benefit of the doubt, which is understandable. But I think it's funny. The headlines are funny. So check this out. 2018, 100 million. 260 million a year later, pre-pandemic. And then the pandemic hits. They doubled the business. So look, more than double. From 500, essentially double revenues. This is trailing 12 months. So this is 2021, basically February 2021 to now. So where is the problem? Nothing. It's just expectations and mismanaged headlines. It's not cheap by any means. 77 times sales. I don't know how accurate that number is. Price to sales. So not PE. There's no PE. It's a growth company. That's why. Why are you looking at the E when you don't have a PE? What? Doesn't make sense. So price to sales is a better representation. I'll give you the example of Zoom. When Zoom, the pandemic hit, the stock skyrocketed faster than the growth in sales because people expected. So then the price to sales for Zoom was 125 at the height of the pandemic. I was like, whoa, that's pretty expensive. Let's wait out. And if you waited out, you saved yourself a fortune. Well, now it's 10. Why? Because the price of the stock dropped and the sales accelerated. So they didn't drop at all. So the management did a good job. So this number will normalize. Look at it. 144, 130, 100, 92. Now it's 70. So this number is not concerning. Okay, they're losing money. But what did they do again? Snowflake? I forget. Delivery or something? Cloud data warehousing software. So it's cloud this, blah, 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 blah. Okay. Use your own judgment. Don't take the headline at its face value. That's whoever wrote these headlines may not necessarily know more than you. All right. Good luck with it. And if you're part of the gang, we will be talking about it tomorrow live.